Hey, everybody, just a heads up. The thoughts and opinions in this episode are all mine and might not reflect those of our sponsors. So if you find yourself raising an eyebrow, blame me, not them. All right, let's go. Hello, home sellers. Sometimes you find yourself or your parents in a situation where they need to make a decision between selling their home and maybe getting a reverse mortgage. So a lot of sellers, particularly homeowners over 62 and their heirs, must deal with a reverse mortgage when they're selling. So what we're finding is a lot of the adult children that we deal with who are selling mom or dad's home, like we talked about in the last episode, they don't even know there's a reverse mortgage, much less what it is and what the impact is. And a lot of times it can wipe out every single dollar of equity in the home, but even at a minimum, it complicates the sale. It is very often misunderstood. Reverse mortgages, people either think that they're this amazing solution, manna from heaven, or a complete scam. Like there's almost nothing in between. But the truth is really somewhere in the middle. So stick around today because we're not only going to break down this fork in the road between do I sell or get a reverse mortgage for the folks, but how to decide. And then if you do decide to get a reverse mortgage, we're going to give you specific practical advice on where to start, who to call, and what to look for so you don't get scammed. Hi, and welcome to Talking Realty, the go-to podcast for home sellers looking to make more money, save time, avoid headaches. Whether you're selling a flip, a new build, an income property, or the place you call home, you're in the right place. I'm your host, Glen Whitten, 20-year broker and founder of the Ohio Property Group. Selling a home can be a complicated and costly process, leaving sellers feeling uncertain and overwhelmed. At the Ohio Property Group, we empower sellers to successfully reach the closing table while keeping more money, lots more money, in their pockets. So to learn more, head over to talkingrealty.com. That's talkingrealty.com. Pick up our monthly newsletter or any of our many, many free home seller tools. And if you haven't already, be sure to subscribe to the show and maybe give us a rating if you're feeling extra generous today. All right, let's get to it. Home sellers, as many of you know, I spend a good portion of the year in the Caribbean. Well, when you have a home next to turquoise water and white sand with a mojito bar every 10 feet, you tend to attract a lot of visitors. Way more visitors than when we're staying in Ohio for some reason. But I digress. As you may not know, I am the youngest of 6 kids. So when my sister Ronnie came to visit, we were out on the balcony talking about real estate between sips. And she asked me what I thought about getting a reverse mortgage. So she is in that target age group. I will not reveal her age for fear of being skinned alive. So she's still my big sister at the end of the day. Anyway, as I mentioned in the last episode, the one about selling a home for your parents, we get an awful lot of listings, usually a few a week, from adult children or executives who are selling the family home for mom and or dad. So the topic of reverse mortgages tends to come up. And if my sellers are asking about them and my sister is asking about them, odds are lots of sellers are wondering. So my sister isn't planning to sell anytime soon, but she lives in a house that she and my late brother-in-law built, like hands-on built this place. It's a palace. It's gorgeous. But anyway, it's probably a little more house and a lot more maintenance than she wants or needs. However, she's not really ready to move on. So she's contemplating one possible solution, which is a reverse mortgage. And I promised her and several other sellers, by the way, that I would cover this topic so people would understand the good and the bad, and more importantly, the to do and not to do when it comes to reverse mortgages. So a lot of homeowners consider a reverse mortgage in retirement, and some do it strategically, others do it very impulsively, and some do it just because they don't have any they see, and some do it because they don't really see any other option. So if you're selling a home that has a reverse mortgage, or you're thinking about getting a reverse mortgage, you need to understand how it works. So in this episode, we're going to talk about what is a reverse mortgage. We're going to talk about the good, the bad, and the ugly, and who should and maybe who shouldn't get one, how it affects the home sale, the probate, and the inheritance, and then what to look for if you're considering one. And then finally, some alternatives to getting a reverse mortgage. So first up, let's define what in the world is a reverse mortgage. And many people hear about them when they reach that target age group, which is 62 and up. That's one of the qualifications for even getting a reverse mortgage. Let's start with the definition. A reverse mortgage is a loan available to homeowners 62 years and older that lets them tap into the home equity without making monthly payments. So with a HELOC, rather a home equity line of credit, you get this line of credit, but you have to immediately start making monthly payments on it to keep the credit line open, unless you have a zero balance. But if you have a HELOC and it's got a balance, you have to make payments on it every month. So this is similar in that you're getting a line of credit based on the equity that you have in your home and your credit and a few other things. But instead of making monthly payments on it, the bank pays you. So they could pay you in a lump sum. You could get a large chunk of your equity right up front. You could get monthly payments, which is probably the most popular version. A lot of folks who are on a fixed income find that inflation is outpacing their monthly income, but they've got all this equity sitting there in their house. And so they will get themselves a reverse mortgage because the bank will start sending them checks every month. The other thing they can do is a line of credit. You would get it when you need it and then either pay it back or not pay it back, depending on the terms of your reverse mortgage. So here's the catch. The loan balance grows over time because there are naturally fees and interest on reverse mortgages. So they're not just giving it to you and going to collect later. They're charging you fees and interest all along the way. And that has to be paid back. So the house then becomes collateral against the reverse mortgage, and it becomes a primary lien on the property so that it has to be paid back. And there are 3 triggering events at which time a reverse mortgage must be paid off. Number 1 is if the owner sells the home. So if you sell the house and you have a reverse mortgage, it's going to show up on the title search and it must be cleared in order to close on the house. The other is when the homeowner permanently moves out. So if they move to assisted living or move in with a relative for healthcare reasons or for even expense reasons or for any reason, when they vacate that property, the reverse mortgage becomes due in full at that point. And the third time that a reverse mortgage repayment is triggered is, of course, when the owner passes away. So I touched on it just a second ago, but let's explore some of the reasons why people consider getting a reverse mortgage. The top reason someone would get a reverse mortgage is when you've got a fixed income retiree that has a lot of home equity, but is struggling with cash flow. That is the most common reason why people jump into these, but there are others. So could be a medical expense. Perhaps there's a gap there, but you've got medical expenses piling up and you want to get them wiped out because they're not getting any smaller. And perhaps it's interrupting other medical needs that you have. Another, unfortunately, very popular reason for getting a reverse mortgage is to help adult children. Now, I'm not your counselor and I'm not your boss, but I will tell you 99 times out of 100, this is a terrible idea. So if you're considering getting a reverse mortgage to help an adult child financially, I'm going to strongly recommend you go get a book called The Let Them Theory by Mel Robbins. There's a whole section toward the end of the book on what to do with financially dependent adult children. It is tough love, but it really breaks it down in a way that makes you understand that continuing to bail out adult children who can't seem to find their way financially is actually hurting them, because you're not always going to be there and you're not always going to be in a position to help them. There is a better path, and it sucks in the beginning, I'm not going to lie to you, but the long-term benefits are worth the pain. So that's all I'm going to say about that, as Forrest Gump would say. And then one of the other main popular reasons why people look at a reverse mortgage, i.e. my sister, would be avoiding selling the home because you want to stay in it. The pain of moving is not insignificant. Believe me, of all people in this world, we understand that. We help people move every day, sometimes for good reasons, sometimes for not so good reasons. But no matter what the reason, someone is moving their home from one place to another. It is uber stressful and it can be very, very painful. So a lot of times folks maybe for not just the moving part, but maybe it's just the community. Maybe they've got a neighbor that helps them, or maybe their doctor's right around the corner, or maybe they can walk to the grocery store. Things that really matter for one reason or another, where this particular location is ideal for many reasons. Or maybe it's a condo that you own, but it's got relatively low or no maintenance, and that's a big deal to you. Maybe it's all on one floor and it's got a garage, all the things you need in order to function as an independent individual. So that's all the reasons there are probably others, but those are the main reasons why people think about getting a reverse mortgage. And it can be very useful in certain cases. However, they're very often misunderstood and very often misused. So let's talk a little bit about the pros and cons of a reverse mortgage. There are some pros to a reverse mortgage, some we've already discussed, which would be the no monthly mortgage payments. So that's why it's called a reverse mortgage, because it's tapping into your equity. It's paying you cash, like I said, either as a lump sum line of credit or monthly income, but it frees up cash flow and even provides cash flow for some retirees. So it could be very, very beneficial from that perspective. You also have that flexibility of how do you want it structured? Do you want it in a lump sum? Do you want it as a line of credit that you can tap into only when you need it? So more of a safety net. Or do you want it as monthly income, regular, steady monthly income? And there are many, many ways to calculate that based on your particular situation. Another benefit, another pro to the reverse mortgage side is that the homeowners get to keep ownership. So as long as you follow the rules and do the things you're supposed to do, you still own the house, because a reverse mortgage is what's called a non-recourse loan. But what it means is that the lender can't go after the heirs. So if the loan balance, for whatever reason, because of the fees and the interest and the payments, go past what the house is worth, or if there's a hiccup in the market at the wrong time and all of a sudden the house is worth less than what's owed on it, the bank cannot go after the estate. It can't go after the heirs for the balance that exceeds. It just gets wiped out. It's gone. So that's one of the I guess, call it perks of a reverse mortgage. Now, on the other side of the ledger, mainly it's that the longer you have it, the more the debt grows, unlike a traditional mortgage that each month comes down a little bit. With a reverse mortgage, your interest is accruing monthly, along with any fees eating into the home's equity. The fees and interest rates are also pretty high compared to a conventional or typical type mortgage. So for the convenience of getting monthly payments or a lump sum or a line of credit with a reverse mortgage, you're going to pay the price. In terms of the interest rates and fees that get tacked on to reverse mortgages. Another con is that even though you're getting paid every month, there are still rules you have to abide by when it comes to a reverse mortgage and staying current. And one of those things that people trip up on is the taxes, insurance, and HOA fees. So with a traditional mortgage, you're going to make payments. And most mortgages contain an escrow account where you set aside a little bit of money every month to pay your annual house insurance and your taxes, however often they get paid. With a reverse mortgage, that's not the case. You still have to out of pocket those things. And if you don't, they're going to find out, because presumably they have mechanisms for checking to see whether or not your property taxes are current. You're probably going to have to provide proof of homeowners insurance every year. So they've got ways of finding out. And if you get behind on your HOA fees and they attach a lien to the property, odds are the bank's going to know pretty fast. At that point, they can call the loan. And that's a bad day for everybody. So if you're going to go down this road, or if your folks went down this road, make sure those three items are paid up. Another downside is, of course, if you inherit the property and there's a reverse mortgage on it, every day that goes by is less and less equity you have to work with. So you're going to want to get that cleared up as soon as possible. And the only way to do that is probably to sell the house. There's probably other ways, but I suspect, depending on how large the balance is, that selling the house is the sensible option. And the biggie that everybody worries about as far as the cons of a reverse mortgage is that it might be a scam. And unfortunately, this is not that unusual. There are companies who prey on older citizens. I'm sure they all have a very special place in hell, but regardless, they're still out there. So if you don't know what you're looking for, or you're not dealing with a reputable company, you could very easily get scammed entirely, or you could end up paying way above market in interest and fees. So We're going to talk about that in a little while, how to make sure you're not getting scammed if you end up going down this road. Hey, real quick, I want to tell you about something we put together for home sellers like you. If you've been listening to this podcast, you already know that I believe most people don't need or want to pay 6% to a realtor. You can sell this place yourself. You just need the right tools. So we sat down, took a look at everything we use with our sellers, our checklists, our process, even our sales contracts, addendums, counteroffer forms, post-inspection forms, you name it. And we put it all together in one package. We call it the Ultimate Home Selling Tool Kit. It's totally free and walks you through the entire process from first thought to moving day. No fluff, no gimmicks, just everything you need to sell your home right. If you want a copy, head over to talkingrealty.com or check the show notes, grab it, use it. If you have thoughts, if you have feedback, I would love to hear from you. All right, back to the podcast. The big question is, before you even go down that particular road, is do you need one? And the way to answer that question is just to ask yourself a few more questions, such as, do you really need the extra cash flow? Is it a have to have or is it a nice to have? Do you have other assets you could sell or use first? Maybe an IRA or maybe some other pension fund, something like that, that you could liquidate versus the very high cost of getting a reverse mortgage. Another one, are you planning to leave the home to your heirs? If so, then you want to consider the impact the reverse mortgage is going to have on the heirs. And maybe you don't care. I don't know. Another is, are you planning to move anytime soon? Because if you are, then that note is going to get called, as I mentioned earlier. So perhaps maybe another question, a better question would be, would it be more advantageous for me to downsize versus getting a reverse mortgage on this home? If you've already downsized and you've got a ton of equity and everything else lines up, then by all means have at it. But if the answer to any of those questions is yes, a reverse mortgage may not necessarily be the right move for you if you've got alternatives. I wouldn't say it's a last resort, but I would say it's somewhere in the zip code of last resort. In other words, there are usually cheaper ways to get money if that's what you're needing. So if you end up getting one or decide that you do want to get one, what kind of things should you look for? And I would say, first of all, look for reverse mortgage companies that are federally insured home equity conversion mortgages. So that is a mouthful. Let me say it again. You're looking for federally insured home equity conversion mortgages, or HECMs, as they're known, but most people just call them a reverse mortgage. However, that is the technical term for it, but you want one that's federally insured. In order to get federally insured, that lender is going to have to meet certain guidelines, which are there to protect you, the public. So if they're not federally insured, you want to make sure to stay away. Another thing to do is to compare. There are many companies that offer these. So you're going to want to side by side these things. Look at the rates and look at the fees. I preach about this a lot when it comes to lenders, when it comes to title companies, when it comes to realtors. And so this is no different. If you're thinking about going into a situation like this, you're going to want to know, and no surprises, folks. There's a truth in lending out there that the truth in lending is real. And it means that lenders must give you easy to understand comparable terms, the cost of the loan, the fees, the interest rate, the effective interest rate. And you're going to want to make sure you sit down and compare all of these things before you jump into it. Another thing to consider is, what are the payout options and how do they relate to you? Do you want the lump sum? Are you trying to solve a big issue, a medical issue, or maybe a huge issue with the house that's not covered by insurance, something like that? Are you looking for monthly payments to boost your monthly income? Or are you looking for a line of credit in case something goes haywire? I would suggest, depending on your cash flow, you might want to look at a home equity line of credit with your local bank. But if that's not the case, then you want this just as a backup and look into it. But make sure you understand, what are the fees? What are the monthly costs? But if you're going to get it as a line of credit, I would look into what is the cost of that to have that line of credit open. Even if it's a zero balance, there's probably still going to be some sort of annual or monthly cost. And there's definitely going to be a cost to set it up. All of that comes out of your equity. So make sure this is the right thing for you to do. Also, in the state of Ohio, there are rules around spousal involvement. So if you're married and you're considering getting a reverse mortgage, the right thing is for the bank to have both parties, both spouses, sign all the paperwork. This is a huge red flag. But if you are approached by a bank or they tell you, no, we only need one of you, just trust me on this, it is a bad thing. You don't want to go down that road. So just rule them out. It's a pretty shady practice when they're trying to quote unquote keep one spouse out of the picture. Not that they don't know about it, but there are some rules and regulations around that. So they may be up to something. And frankly, how you do anything is how you do everything. So if they're willing to bend the rules to make something happen, trust me, they're bending the rules all over the place in areas that you might not notice or see. Also, make sure you fully understand before you take the plunge, what are the repayment terms? You don't want your heirs or your executor to be completely blindsided by this. So understand what it takes, when are repayment terms triggered, and what do they look like? Is there a payoff fee? Is there anything like that? You want the full picture before you get the loan. Okay, so let's fast forward. If you're selling a house with a reverse mortgage on it, that loan balance and all fees must be paid in order to sell the house. And they can be paid at closing. So you don't need to pay it off and then sell the house. You can put the house on the market, but understand that your taxes and transfer taxes and property taxes, all that stuff is going to come off of what you sell it for, along with any real estate fees or title fees and the payoff for the reverse mortgage. So get a ballpark idea before you put the house on the market of what that payoff balance is, because if it's more than the house is worth, you may consider, if you're in an estate, you might consider just letting them foreclose. That is not a topic for today, but if you're an heir and there's a reverse mortgage on a property that you are charged with selling because it's part of an estate, if that reverse mortgage balance exceeds, especially significantly exceeds the value of the property, and you're never going to get it back, just talk to the attorney handling the estate and ask them if you can walk away. Because honestly, why go through all the pain and headache of selling that property? Because we already know that it can be done, but it's not something that takes no time. It takes time and effort and sometimes costs money. So you want to make sure before you go down that road. But if it is worth more than the reverse mortgage, then great. Put the property on the market, sell it, and keep the difference. As I mentioned earlier, one of the triggering events for a reverse mortgage is the death of the homeowner. So if the reverse mortgage is in the name of your parents or parent and they pass away, that information is going to trickle back to the bank. And then typically you have 30 to maybe 90 days to wrap this up. They could probably make it longer if there are extreme circumstances. Again, talk to the bank, work with them, but understand every day that goes by is costing you equity. So the ways through it is you can sell the home, of course, but if you want to keep the home, so somebody in the heir list or somebody in the family wants to keep the home or buy it out from the other heirs, or you are the only heir and you want to keep it, you can get a regular mortgage and pay off that loan. That is entirely possible. You don't have to let the house go. Maybe you have equity in another property or something like that, but you don't necessarily have to give up the house. But like I said earlier, if it's a horrible negative situation and you're way upside down in that house and you don't want to keep it, you can usually just walk away. So a big mistake that heirs make, though, when it comes to dealing with a home that has a reverse mortgage is they don't act fast enough. Because if that 30 to 60 to 90 days or whatever is written into the reverse mortgage terms, if it expires and you haven't made contact and made other written, not verbal, written arrangements with that bank to extend, they can start foreclosure proceedings once the death becomes known to the bank. So you just need to educate yourself and find out what your options are and then move quickly. So maybe a few alternatives. If you're considering getting a reverse mortgage because you've got a cash crunch situation or you've got a major expense or you can't handle the house anymore, but you also don't want to let it go. I know these are kind of complicated issues. So let's talk about some ideas that maybe solve your problem without you getting a reverse mortgage. One, you can always downsize. You can sell that house if you're not attached to it and you're okay moving on. You can sell it. Take that equity, move to a smaller house that has lower costs, or maybe one that has less maintenance, something like that. because maybe it isn't necessarily the expense of the house. Maybe it's a 10-acre property with a bunch of buildings and you're by yourself and it's just too much. Something I mentioned earlier, you can get a home equity line of credit. So if you're looking for that safety net, I would recommend contacting a local bank or a credit union, something like that. Get a hold of them, tell them you'd like to have the safety net of a line of credit for a specific situation, or maybe a unforeseen situation, but you'd like to have a certain amount of money available to you. Depending on your credit and the equity in the house, you can absolutely get set up for a home equity line of credit a whole lot cheaper than you can a reverse mortgage. So that might be another way to go. But remember, if you get a home equity line of credit and you use it, you have to immediately start making payments on it, usually within a month or two. Another idea is maybe slicing off part of your home as what we call an alternative dwelling unit. We will probably do an episode on this down the road, but this is becoming very, very popular. And essentially, it just means you're going to segment off the house and rent part of it out. And depending on where you are and how it's zoned, you can rent it out to a renter, to maybe Airbnb. You could also try, if it works for a home office, you could do something like that. But anything you can look at to still live there, but get some income off of the part of the property that you don't need or want to use right now is a great way. Some houses are very conducive to this, and for a minor amount of money can be set up with separate entrances. Maybe it has separate baths or separate floors, or there's a basement that has its own entrance. There are lots and lots. The place I'm in right now, we have a separate entrance to the basement. It's a bedroom. It has a little office. It has its own bathroom. And there's a door between that part of the house and the rest of the house that can be locked. So everybody's secure. We don't take advantage of it like that. That's our guest room. We have lots of guests. My sister Ronnie stayed there. She loves it. Gave us 5 stars. How about that? But anyway, those are certainly alternatives to fix a cash flow problem. Another thing you can do is a cash out refinance. If you've got some income and you've got a ton of equity in the house, you can do, like, instead of a home equity line of credit, which is more of a fluctuating amount and typically has a fluctuated interest rate, you can get a cash out mortgage where you go in and say, listen, I want to extract X dollars in equity from my house, and then I want to make regular payments at a locked in interest rate. Banks can do that for you. So take a look at that. There's also such a thing as a bridge loan for seniors, which is short-term financing until you plan to move. So if you know you're going to sell, you know you're going to move to assisted living or in with a relative, something like that, this could be a great option to go to the bank, look for a short-term senior bridge loan that will provide enough cash to maybe do some repairs or to, front the money for the assisted living, because they usually want a month or two up front, things like that, until the house can be sold. That's another great option. So plenty of alternatives when it comes to this. This episode of Talking Realty is brought to you by our friends at Associates Title. This team is shaking things up by focusing on what truly matters, putting you, the customer, first. Whether you're buying or selling or investing for sale by owner, you're working with a realtor, doesn't matter. They've got your back with incredible cost savings and the latest technology to streamline the process for you. Their secure online portal keeps everyone in the loop, from buyers and sellers, lenders, agents, everybody, all while keeping your data perfectly safe and communication crystal clear. If you're getting ready to make a move, don't underestimate the importance of having a great title company in your corner. Check them out today at associatestitleinc.com or call my friend Ryan Phillips at 614-419-2418. Check the show notes for that information. Do not leave your title company choice to chance, and definitely don't let the buyer or their agent make that choice for you. All right, back to your regularly scheduled broadcast. Okay, let's say you've been through all the decision making and now you're ready. You're going to go down this road. You're going to get yourself a reverse mortgage. So if you've decided this is the right move for you, the next challenge is finding a trustworthy lender. And we talked earlier about federally insured. So that's a big one. But not all reverse mortgage companies, including federally insured reverse mortgage companies, are created equally. And fees, interest rates, terms, all over the place. Start with a HUD-approved lender. So the only federally insured reverse mortgages are what are referred to as home equity conversion mortgages. And these must be issued by a HUD-approved lender. I'll tell you what, Go to HUD.gov and look around for the Home Equity Conversion Mortgage Program, and there will be a list of approved lenders. I'll tell you what I will do though. I will find the link to the lenders list and I will put it in the show notes just for you. So you can check the show notes for this episode 37 and I'll have a link. Now those links do change from time to time. So if you try it and it doesn't work, please let me know so I can update it. Another option is the AARP reverse mortgage counseling. So the AARP, which is I'm sure everybody is familiar with, has run into this so often that they set up a reverse mortgage counseling. So just to be clear, AARP does not offer reverse mortgages, but they do offer counseling and objective guidance for how to navigate this. They'll help you decide whether or not this is the right thing for you. And then they can also give you advice on finding the right lender. You can go to aarp.org or you can call 800-569-4287. Again, I will put all of that in the show notes. If you're rolling down the highway or you're doing some gardening, listening to this, fear not, check the show notes. I'll make sure you have those links. Another one that I'll link to is the National Reverse Mortgage Lenders Association. So this is an industry group and association, which we're all familiar with those, that requires members to follow specific ethical guidelines. They have to have training and ethical guidelines to become and remain a member. And you can go to reversemortgage.org and you can find out all about them. And finally, try your local bank, try your local credit union. So some banks got out of the reverse mortgage business, but some didn't. A few hung on and they offer probably some of the best rates. And certainly it's somebody you know, which should help you feel a little bit better. Once you've found a handful of lenders you want to check out, or maybe somebody you know has one and has recommended it, there's a few things you want to do to compare these loans. And in addition to the fees and rates, and make sure you're talking about all the fees, the initiation fees, the loan fees, the ongoing fees, the interest rate, what the payment is going to be, and then what happens at the end if you decide to pay it off. Get that list down, put them in columns side by side, and let's make a comparison. Find out how they offer customer service. Do they have people you can call that, if you have questions about the loan later, things like that. And then here's a handful of questions when you're interviewing these lenders, which you should do. Don't shortcut this. This is too big of a deal. The first thing you want to ask is, are you a HUD-approved lender offering home equity conversion mortgages, HECMs? If they say no, walk away. Don't care what their line is. Don't care what their justification is for not being a HUD-approved lender. If you're good and reputable and you treat people ethically, you should have no trouble getting and maintaining your HUD approval. If they don't have it, that should be the biggest red flag of all. Next, ask, what fees do you charge? As I said, itemize them out and compare them. Ask about the interest rate. Is it fixed? What is the interest rate? Is it adjustable? If so, how does the adjustment work? Is it every 2 years? Is it a certain cap? I would try to steer away from adjustables if you can, because that's a gamble. That's a big one. Another is, what all payout options do they offer? Is it a lump sum? Is it a monthly? Is it a line of credit? And which one is right for you? What happens if I want to move? Great question to ask. If I decide to move in 5 years or 2 years or whatever, maybe your health changes, or maybe you get a couple of grandkids that are 3 states away and you decide you want to go there. What happens if you want to move? What are the repayment terms and what are the fees for the repayment? And then finally, can I get a written loan estimate? This is part of that truth in lending. And they may or may not offer this, but if you ask for it, they should have no trouble giving it to you. So this allows you to truly compare apples to apples. So can I get a written loan estimate? So ask these questions, do your comparisons, and then decide which way to go. So reverse mortgages do have fees, but some lenders, just like title companies and realtors and everybody else on the planet, they inflate them. Why? Because they can. So here's what I would consider a reasonable and excessive range. And this is just based on some light research that I did for this episode. Origination fees. So this is essentially the commission for the lender. It's a commission. They're going to call it all kinds of other things, but anything that says origination fee is a commission for that loan officer. Up to $2,500 for homes under $125,000, or 2% on the first $200,000 and 1% on the rest, capped at $6,000. So that's the HUD guidelines. So you could pay anywhere from $2,500 to $6,000 of your equity just to get this bad boy opened. Keep that in mind. Make sure that this is worth the calories before we go down that road. Then they have something called Mortgage Insurance Premium, or MIP. This is something you see normally on FHA loans. It's actually on conventional and VA loans as well. They just call it something else, but it's mortgage insurance. If you default on the loan, it's insurance for the lender. It doesn't stop foreclosure, doesn't stop anything else. It only protects the lender, never protects you. That is normally 2% upfront and then 0.5% of the balance of the loan every year. It gets tacked on. So whatever amount you're in for, 2% upfront, 0.5% annually, and ask them for real dollars. Okay. Those guidelines are, again, set by HUD, by the Housing and Urban Development, your government at work, not the lender. So if it's more than that, then they're padding it. The appraisal, because there's going to have to be appraisal to find out how much equity you have, that's going to run anywhere from $500 to maybe $700 or $800, depending on where you are. And then title and closing costs. They have to do a title search, see what other liens are out there, all that good stuff. Probably somewhere in the $1,000 to $3,000 range. Sounds a little high, but be very careful of who the lender chooses for the title. Make sure you ask if there are options. Can you choose your own title company? And if you're really stumped, give me a call or shoot me an email. I'll see if I can help you find somebody. Hey, real quick, as most of you know, we do not run paid ads for the real estate company or for this podcast. We rely completely on word of mouth. So if you find any of this content useful, would you mind taking a few seconds, give it a rating? And if you're feeling really generous, maybe write a review. I'd consider it a personal favor. Let's spread the word to other home sellers. All right, back to your regularly scheduled broadcast. Red flags. Here we go. If the origination fee or the lender's commission is above $6,000, somebody is up to something. They are padding that number, and they may be doing it with some junk fees or BS fees that are thrown in on the loan estimate, and it might say something like processing fee. So you'll have an origination, and then you'll have a bunch of title fees, and then you'll have something that's just sort of a generic name. Processing fee, transaction fee, service maintenance fees. Same, go back and listen to my title company episode with Ryan Phillips. There are any number of creative fees they can throw in there, and they make them sound really official, and they're total junk fees. They should be thrown out. All right, so if you see a ton of that stuff, that's a red flag. MIP above the required 2% and 0.5% annual. If they're telling you it's 5%, 3%, anything more than 2%. If they're telling you that annually it's going to be more than 0.5%, they are coloring outside the lines, folks. And the only way they get away with it is if you let them. This is why the written loan estimate is so important, because you're going to see fees that are out of line, and you're going to see fees from one lender to another that don't exist. Like one lender will have 2 or 3 fees that none of the other lenders have. That is a junk fee. Walk away. There's plenty of fish in the sea. You don't need to use anybody that's going to try to dupe you up front. Interest rates typically are right now between 4.5% and 6%. Now, depending on where you are and when you listen to this and a few other factors, that's subject to change. But right now, as of 2025, first quarter, 4.5% to 6% is the basic range I'm seeing for reverse mortgages right now. If you get an adjustable, that was a fixed rate. If you get an adjustable rate, they're always lower up front, 3.5%, maybe as high as 5%. But remember, they can go up. And in this market, they probably will. Good rule of thumb, compare your rates, compare your fees, just like any other loan. If it's lower, it's better. Rates are just for profit. And I'm not saying banks shouldn't make money. I'm not saying that at all. I'm just saying that fair is fair. And maybe you don't want to call around, and maybe you want to take the first person that reaches out to you. If they're calling you, that's never good. Just like realtors who cold call you, that's probably not good, because really busy realtors don't have to cold call people. Just saying. Doesn't mean they're bad, doesn't mean they're good. It just means, why are they cold calling me when, if they were really, really good and people were talking about them and recommending them, they shouldn't be knocking on my door out of the blue. One thing you can ask, and this is kind of an insider thing, is ask the lender if they're adding any margin. Okay, margin. Ask the lender if they're adding any margin to your interest rate. So some lenders love to mark it up for profit. You may or may not be able to talk them out of it, but I don't want to talk them out of it. I want to get their best deal out of the gate. Now, if you want to go head to head, negotiate with the lender, fine. But they do this for a living, and they do just these loans for a living. So odds are they've got the upper hand. I would rather take the person that's going to be straightforward with me right out of the gate. All right. So my last bit of advice here is just some general warning signs. If you're talking to reverse mortgage companies, if they're pressuring you to move fast, walk away, because legitimate lenders understand this is a big decision. You need to take your time. So if they're pressuring you, they're giving you all these reasons why you should act now, or you need to make this happen in the next, because the rates are doing this and the fees are doing this, forget it. If you're getting the used car film from these folks, then trust your gut and walk away. You've been on this earth long enough to know when somebody's scamming you. If they push a single payment type when you're asking about the various options, even if you're not necessarily interested in more than one payment option, have them explain it. If they're really hammering you to take this one lump sum or whatever it is they're pushing you to take, that's another red flag. They should not be pressuring you to do or choose anything. They should be providing information and letting you choose. If the fees are above the HUD guidelines I gave you, or they've got fees they can't explain. If they say things like, oh, well, that's unfortunately on every loan, and they can't tell you what it is, that's probably another huge red flag for you. If these companies you're talking to are not on the HUD approved lender list, get out, pack your bag and run the other way. A good lender is going to be on that list. They're going to be patient. They're going to be transparent, and they're going to give you written estimates, and they're going to let you take your time and make the right decision. So if you're planning to stay in the home for the rest of your natural life, or if you have no heirs who want the home, if you can afford the taxes, if you can afford the insurance, if you can afford the upkeep and the homeowner association fees, then this could be a good option for you. But if you want to leave your home to your heirs, if you have better alternatives for cash flow, or if you may need to move in the next few years, this is probably not a good fit for you. Reverse mortgages may not be the best answer. Look back to some of the alternatives. So reverse mortgages can work for certain situations, but not for everyone. If you decide to move forward, please shop around, compare fees, work with a HUD-approved lender. But if you want to talk about your specific situation, just head over to talkingrealty.com, come to this episode, and I'll have resources there. AARP is a fantastic resource. They are really looking out for you, and they understand your situation. So I would give them a call, and their services are almost always free. So that is what I have to say about reverse mortgages. And I feel like there are probably some unanswered questions. So please head to talkingrealty.com, find a way to reach out to me, and let's clear up anything that I left unsaid. And perhaps we could fill in the blanks in another episode. But for now, I'm going to let you get back to your day. Thanks for sticking around today. Hopefully you learned a little something about reverse mortgages, or maybe you had some fun. If so, share this episode with someone who could use it, either on the socials or privately. Feel free to tag me if you go public. The Talking Realty podcast is brought to you by Associates Title and the Ohio Property Group, a family-owned brokerage serving all 88 Ohio counties with realtor services. By the way, if you have questions, if you have topics, if you have guests you'd like us to cover in the future, I want to hear from you. Head over to talkingrealty.com and say hello. Thanks again for tuning in. Until next time, keep making smart moves in your real estate journey. For the Ohio Property Group, this is Glen Whitten signing off. And remember, you can sell it. We can help.